Rivian's CEO was at an investor conference on June 2nd. This conference is held annually, and so this year the CEO was found reflecting on the wild year Rivian had since this last investor conference. So let's get into those reflections and look at the wild ride and where Rivian is now. So, as we look at this year, the CEO says the supply chain is much more stable in that for us, not just in terms of broader supply chain, but for Rivian specifically. And that's allowed the company to have much more efficient operations for us this year than we were at last year. So remember, last year supply chain shortages were a big deal, and most notably, they were a big deal for car manufacturers like Rivian. This year, those supply chain shortages have eased substantially. They're still not back to being completely normal, but they have improved meaningfully, and that's been a big deal for Rivian. Remember, last year in 2022, Rivian produced about 24,000 cars. This year in 2023, Rivian is forecasting to produce 50,000 cars, and it was relatively a little bit behind pace in terms of the first quarter production, but the company expects it will get to its full year 50,000 car target. So, another big thing that has changed in the last year is the macroeconomic environment. The most important thing there has been the Federal Reserve. The central bank in the US has raised interest rates by over 500 basis points. That's made it a lot more expensive for consumers to borrow money for big item purchases like cars. And so that's brought down demand for car sales, and Rivian being one of them, right? So that's a big deal. Consumer demand is coming down substantially. Back orders are coming down. Competitors of Rivian have decreased pricing to try and keep up consumer demand because of higher interest rates, because of more uncertainty. And so that's been a big headwind for Rivian over the last 6 months or so, and it will likely continue to be a headwind for the rest of the year. As the Federal Reserve has indicated, they plan to keep interest rates higher for a longer period of time to slow down economic activity in an attempt to bring inflation down. So, moving on, Rivian has made a number of huge changes within the business in this time. We've simplified our operations with a relatively heavy emphasis on driving down operating expenses. And they're going to start to see some major steps over the next few quarters, both in terms of their technical changes to the vehicle, but also some big commercial savings. Now, the second part of that, the big commercial savings, is coming on the back of falling prices for commodities on everything from lithium to metal to iron ore, all of the commodities that go into making a car, transporting the car, logistics, prices have come down considerably. That's going to help Rivian in terms of its production costs, and that's going to help it move forward in its path towards profitability. And I will end on that note here. So, between the predictability, the supply chain improvement, and the predictability of its operations, the CEO sees a clear line of sight to their profitability without making a clear timeline designation as to when the CEO believes the company will reach profitability. Nevertheless, it's been a wild ride for Rivian in the last year since it last attended this conference. The company has made some huge steps forward in terms of its path to profitability, increasing production, and investors in Rivian stock hope that this will have positive implications for Rivian stock. Alright, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.